Chat with Traders, episode 96.
This is your key to the minds of trading's elite performers, those who profit in relentless markets. Here on the Chat with Traders podcast, you'll hear about the skill sets and tactics that lead winning traders to win, so you can level up and become a better trader. Here's your host, Aaron Fifield.
All right, sponsor number one for this episode is DarwinX. For you listening, if you've been involved in markets for a minute, then I'm sure you get it that making a living as a trader on a small amount of capital is tough going, even with a sound strategy. DarwinX recognize this and have made it in their best interest to help traders succeed. For those who can perform, DarwinX invest capital with traders on their platform, some who now manage more than $500,000. For more info about DarwinX, visit darwinx.com/traders. That's darwinx.com/traders to learn more. And sponsor number two is Salesforce. Salesforce is the ultimate CRM for your business, with you for every step of your customer's journey. Blaze trails across your entire business with Salesforce to create one connected customer experience. Be smarter, more productive, and more predictive with your marketing using an intelligent platform that integrates marketing with sales, service, and commerce. Learn how to create a better experience for your customers by using Salesforce at salesforce.com/traders. Welcome. What's up? How you doing? Welcome to episode 95, folks. I'm pleased you could be here, and let me briefly introduce my guest, then we'll jump right into the interview. So, this week I spoke with Nico, who asked me to keep his last name private, though he does go by @inefficientmrkt on Twitter. Put simply, Nico is a day trader with a thirst for momentum. He predominantly trades low-priced stocks that have a tendency to move fast and far, and roughly 90% of his positions are on the short side. But the main reason why I brought Nico onto the podcast is I feel as though he has a really interesting story which many traders will be able to relate to on one level or another. The short of it is, Nico placed his first trade in 2007, made 4x on his starting capital year one, and then slowly bled his trading account for the next 7 years. He's now found his groove, but his overnight success was 8 years in the making. The subjects we discuss during this episode are very much centered around Nico's journey and development as a trader, and how full-time trading became more than just a pipe dream. Please enjoy, guys. I'm Aaron Fifield, and here is my guest, Nico. Nico, what's good, man? What's going on?
Greetings. How are you?
I'm doing all right. How about you?
Great. I just spent the day and I set up my new war rig. I got
nice.
two 43-inch screens. I had to buy a new table for my desk though because they wouldn't fit before.
Trader problems.
Yeah.
Funny. Nice. 2 43-inch screens. That must be massive.
They are so cool. They're Dell's new multi-clients, and you can divide them into virtual screens. So even though I have 2 physical screens, I have 12 usable virtual screens.
Okay. That's really cool. What were you using before?
I had 4 24-inch screens and 28-inch vertical, like in portrait.
Yeah.
That I was using before, but this is much more. This is way better.
Oh, that's awesome. I imagine it might take a little bit of getting used to. Yeah.
It does. It was actually a gift from my girlfriend. She got me greatest gift of all, man. She got me one of these beasts for my birthday, and I wanted to use it, and my computer at the time was too slow, so I used that as an excuse to get a new machine that could power it, and man, I started using it, and I loved it so much. I was just like, I just need one more of these, and that's all I need, and I ended up getting rid of all my other older monitors.
That's very cool. That's very cool. And what's the resolution on those? Are they 4K?
They are 4K, so you get the standard 3840 by 2160 for each one.
Okay. Nice, man. I like it. You'll have to share a photo with us.
Definitely. I plan on it.
And how'd you go with the desk? Did you find a desk that fit?
Gosh, I was almost resigned to the fact that I might need a custom desk, because these two monitors next to each other are about 76 inches wide.
Mm-hmm.
And I was hard pressed to find a wide enough desk that I could put both of them on without, a ton of monitor hanging off the edge and it looking funny. But I found one desk at IKEA that fit the profile, and I just mounted it to my elevator desk legs, and we're good to go.
Okay. Good stuff, man. Good stuff. Yeah, well, I look forward to seeing a photo of it.
Thank you.
Well, before we go any further, I want to say congrats on having a really good month in August. I think that was your best month to date, yeah?
It was. Thank you very, very, very much.
You must be stoked with that.
It feels amazing. Yeah, it feels really good.
Cool. All right. Well, I know a little bit about your story, Nico. And what I do know is that it's going to really inspire a lot of people who are listening to this podcast right now. So I'm really excited to have you on, and I'm looking forward to, the conversation we're about to have. So let's get this underway. Take us back 10 years or so, right to the very beginning. What got you interested in trading? Where did you start?
I was working for a small boutique software development firm out of high school, and I was developing software. And the short story goes, I wanted to make more money, and the owner was reluctant to pay me more money because he held it over my head that I dropped out of college, and I then had to decide whether I wanted to go back to school or go into business for myself. And I wasn't too fond of school at the time because I wanted to take computer science classes and whatnot, but they wanted me to take all these other classes, all these other courses I had a hard time taking. So I decided I didn't want to go back to school. So I went into business for myself, and I knew computers. I knew how to develop software. So I started building my own business from nothing. And one of the very first clients I had traded stocks, traded equities. And I heard of the stock market before, but I never had much interest to the degree that I would actually do something about it. But to finally meet someone in my life that was familiar with it, that was a good starting point and gave me good exposure to it. And once I understood the kind of money that could be made, that definitely held my attention.
So how did you find out that this guy, this client of yours, traded stocks? Did it just come up in conversation, or how'd that come about? I
eventually got comfortable enough to ask, hey, where's some of this money come from? And that was basically the answer. To have someone that you see you respect and who's doing well for themselves, and to ask them where their money comes from, and that's the answer. That was enough for me to finally start getting very interested in it and seeing what I could learn about it.
Okay, so it was obviously quite clear to you that he was doing quite well. I mean, was there any hints that sort of gave it away? Was he a high-paying customer? I mean, what sort of gave it away that he was doing quite well?
Yeah, I was definitely making more from having him as one client alone than I was working at my software company that I worked for 6 or 7 years. And he was just my very first client, and I knew I had to charge more than I was making at the software company, but it was a great situation for both of us, and I got compensated well, and I got to learn a little bit. But what I learned from him, it was very different than what I was ever really interested in the sense that he would trade big cap, large cap stocks, and he was interested in Dow Jones components and whatnot. And I just, once I understood what volatility was and I had a sense for it, watching those stocks move 1, 2, or 3% in a day, 3% is a big move for stocks like those. That wasn't very interesting to me. But when I found out about, cheaper price stocks, that was, wow, these things move 10, 20, 50, 100% in a day. That was much more interesting to me.
Okay, so it's almost fair to say he was probably more of a longer term guy or a bit more of an investor, yeah?
Definitely.
Okay, cool. So walk us through your first year, like from when you became interested because of your client there until about 1 year on. So I think it was about 1 year before you actually placed your first trade with real money. What was going on inside of that year?
I was trying to learn as much as I could, and I was also going from when I was a software developer, I was living paycheck to paycheck, and I had no savings at all. So for me to try to start out with something in the market, not only did I need to save money, but I had I had all these habits that I had to get in check for living paycheck to paycheck. Once I started having some income, decent income, at first I got excited and I was, probably spending more than I should have. But after a while I was like, okay, this is great having money, but I really need to save some money because it would be great to open up a trading account at a brokerage. And that's kind of where that first 12 months was after I learned about the stock market, was me rearranging some habits and saving some money. And meanwhile, learning, I won't say as much as I could about the stock market, but definitely learning some about the stock market and just kind of trying to be able to stand on my own 2 feet and get something going right from the start. But it took me a while, about a year.
Okay. So I just want to pick up on something you said there. I mean, it's a little bit off topic, but you mentioned that you had to break some habits so that you weren't just going paycheck to paycheck. Now,
yeah.
I know there are a lot of people who do this, and it's kind of crazy to me to think that people do that, obviously, when they don't have to. What were some of the habits that you had to break? How did you break those habits so that you weren't going paycheck to paycheck?
Well, for all the years I worked at the software company, I was paycheck to paycheck. So that means I was, whether I liked it or not, but I was programmed to spend my entire paycheck every month because that's all I needed, every bit of it to survive, to pay rent, to buy food, living on my own, to, whatever. I was a lot younger, but, I probably spent money on stuff I didn't need to spend it on. But all that, that was a big habit for a long time, 7 years of doing that. So once I finally got some decent income, here I was used to spending my entire paycheck. So after a few months, I think I was spending my new paycheck when I went into business for myself, which, by the way, that wasn't an immediate thing. I made the decision I'm going to leave my software company, but I still worked there until I was able to get something going on the side and generate some, a good chance of possible income on the side before I jumped ship, because I did have bills to pay, just like everyone else, food and rent and whatnot. But eventually it was fine. But the habits thing, it was just, I was programmed to spend money, and it took me a while to realize, hey, just because you're making more money, you don't need to spend it all every month. Like save some and see what happens, especially if you want to, dabble in the stock market. Gotta have some money to play with. It's gotta come from somewhere.
Absolutely. And I think when you go into business for yourself, obviously you don't kind of have that same sense of security as you do as a full-time job, where you've got another paycheck coming next month. And when you're out on your own, it's kind of like you don't necessarily know where your next client is coming from, or where your next when you're next going to send out your next invoice or whatever. So
that is the truth, man. Complete truth.
Yeah. I mean, I went about it much the same way because I used to run a graphic and web design business, which I kind of built up while I was doing my full-time job.
Oh, nice. That's the best way for anyone that wants to do their own thing, work for themselves, go into business for themselves. Please, do not quit your job and just do it. I mean, I definitely think, I'm of the opinion, at least for me, it's much better to keep getting your paycheck from your regular job and try and get something started on the side. See if you can get something to stand up on its own while you still have a job and you still have that paycheck you can rely on before you cut loose, because it makes it so much easier, at least psychologically. For me, it did.
And I mean, that can even tie in neatly with trading too. So there's many overlaps there. So do you recall your first trade? Like, how did that go? What were the emotions like when you put on that position? What was it like?
Yeah, my first trade was in early 2007, and I bought some stock in Apple at the time, and I don't know what my time horizon was, how long I was planning to hold it, but I think I ended up selling it later the same day for maybe $100, and I just thought that was the greatest thing ever. I just thought that was the easiest $100 I'd ever made, and that I'll never forget it. And even though it was only $100, man, it stuck with me this whole time, and that was my first taste of it. Even though it was just Apple in a big cap stock, a large cap, it was just getting paid that much without, I couldn't even call it work. It definitely resonated with me, and that was the kind of money I wanted to make, compared with going to work, working in a cube or an office, and nothing wrong with that, but it's a different mentality. And once I got a taste of that, I definitely wanted more.
Yeah, I feel that for sure. And I think that's, a lot of people who are attracted to this, I mean, that's kind of what goes through their mind as well when they first come into trading.
Absolutely.
So, I mean, during that first year, what were some of the things you were learning about, about the stock market? What were you reading? Where were you getting your information from?
Yeah, so back then I was using a charting platform called Telechart, and Telechart's by a company called Warden Brothers. I guess they've been around forever. Apparently they had stock chart programs since before Windows. You could get stock charts in DOS. They had a DOS program for stock charts and whatnot. But anyways, I was using their Windows program and started using that in 2007, and it had a built-in chat window that I've always been into chat. When I was a kid, I used to chat on IRC when I was younger in high school and whatnot, and I've just always been big into chatting and whatnot. And to have a chat room with a bunch of investors and traders, man, I thought that was the coolest thing ever. And I got to see what people typed, and who knew what, and that type of thing, and that got my gears turning in all different sorts of directions. And it was really good for me to learn about other people, what they were doing. That helped clue me in. I was definitely self-directed towards technical analysis. I love the idea of looking at a stock chart and just going, okay, I know, do I want to buy this, sell this, or not touch it at all? And that appealed to me a lot more than the fundamental side. The fundamental side was it seemed like so much work. That seemed like having a regular job all over again, because it seemed like you can just pour all these hours and hours and hours and hours of research. Maybe you study something for days, weeks, maybe even months. I don't know. Just one stock or a handful of stocks, and you get to know them intimately and you understand their business. But it just seemed like, at least back then to me, it might take 6 months or a year for the market to realize whatever you may have realized doing your fundamental analysis. And even if you thought it was a great investment and you buy it, I mean, if the market doesn't know it's a great investment, maybe it takes 9 months or 9 years for market to catch up to what you were thinking, if at all. So just timing the market using stock charts, that was, I mean, instant gratification. I love that idea. that was big for me.
Okay, cool. So, we're about 1 year in at this point. You've taken your first trade on Apple. You banked $100. Your interest has been piqued in technical analysis. What was it like moving forward from there? Maybe walk us through the next year or couple years on from that point. What was your experience?
Okay, so for basically my first year since I placed my first trade, for the next 12 months after that, I was attracted to low price stocks, and I didn't even know what shorting was at the time. And I just I thought the only thing I could do was go long. So I was just buying all kinds of low price stocks. I mean, on momentum. I mean, any stock that had volume coming into it and it was on a rampage, ripping up. I was buying some. I was chasing it. I was, take your pick. I was doing it all. I was doing anything I could to get long and buy some shares. And I don't know whether it was the micro cap market of 2007 or just pure luck, but basically a year of doing that, I made about close to $20,000 doing that my first year, and that made me feel on top of the world. I thought, man, this isn't so tough. I don't understand why everyone says, over 90% of traders fail. This is so easy. Oh man, I'm going to do this the rest of my life. This is a walk in the park. I don't know what everyone's so fussing about. I don't know why they're having such a hard time doing it. This is easy for me. And that was probably the worst thing that could have happened to me, as you could imagine, because, I don't want to get too far ahead of your question, but yeah, that was basically my first year. So I had a taste of large success from basically not knowing much of anything. And I think it was just, like I said, I don't know whether it was the microcap market of 2007 or just dumb luck, beginner's luck, but I had a good year in terms of profits.
Okay. Yeah, I mean, that's a really decent first year to have made $20,000. How much capital did you start with?
So my first account I opened with, I saved up $5,000 and opened up a Fidelity account, and just slowly over time kept saving more money and adding more money to it. But I never really, my first year I might have been a little strong with my position sizes just because I was doing so well and I didn't know any better. But I'm sure we'll get into it. But later on, I toned my size down significantly and kept it in check once I realized I knew that I didn't know.
Yeah. Well, let's get into that a little bit. So the first year you made $20,000. You felt like you were on top of the world and you nailed this trading thing. When did that begin to change? When did you realize that you hadn't quite nailed it yet?
Oh man, probably, I don't know, not soon after, maybe the next month after my first year, a short time after that. I just, everything I was doing that entire past 12 months, it wasn't working anymore. Either my luck ran out and or the market changed, and what used to work no longer worked for whatever reason. And I, unfortunately, thoughtlessly, just continued to be the junkie, degenerate gambler at the slot machine, and I just kept pulling the handle. And even though it stopped working, I just kept doing it. I kept pulling the handle, and I'd say the next 12 months after that, I had lost all of that profit that I made the first 12 months, and I was just kind of left scratching my head the entire way, going, I don't understand why this isn't working. Maybe it's going to start working soon. It must start working soon, because man, I know it definitely worked that first 12 months, and I'm not doing anything differently. And it was just the cold reality slammed me right in the face and took all those profits away. Maybe even a little bit more that first year, or my first losing year after my first winning year. But that was the cold truth hurt at that point. It was it finally caught up to me. Okay, now I understand why everyone says this is so hard, damn near impossible, and over 90% of the people fail doing this.
All right, so let's just bring listeners up to speed and put things into perspective here. So from what I understand, it was the next 8 years that followed from there where you pretty much had losing year after losing year after losing year. Is that right?
That's right. Yeah, 7 years to be exact. And it was for those 7 years, at the end of every year, I was in the red.
Okay. So,
and again, it's just Yeah, go ahead.
Yeah, so I really want to dive into this because I think there's a lot of value in really kind of dissecting this and finding out why it took you so long, how you managed to break through and all that sort of good stuff. So, I mean, probably one of the first questions I'd like to ask you around this, 7 years losing year after year, it's got to be painful. How were you able to sustain these losses, and what sort of things did you do to manage your risk during this time?
Okay, so great questions, because after my second year of trading, I had my first year winning. Second year, I lost everything I won the first year. And at that point, I realized, okay, it's easy to lose, or it felt better to lose money that I'd made from trading in the markets, but it really hurt to lose money that I worked hourly for, that I worked on the side, I had a real, I worked legitimate, I don't want to say legitimate for, but, I worked as my job, my work, my business. A lot harder to lose that kind of money than it was to lose profits I'd already made in the market. So once I started losing, job money, my work money, that's when the emotions that's when it just felt terrible. It just felt so hard because I'd lose it so fast, and it would take me, so long, so many hours, X amount of hours I'd have to work to like make up for those losses in the market. And so that's when I started understanding, and I just went, whoa, okay, I don't know what I'm doing. This was very misleading for me to have a successful first year. And I clearly did not do well the second year. And I think I'm starting to know that I don't know I don't know anything really. I thought I knew all this stuff my first year. I don't. And that's when I put my size in check. And that's when I said, okay, since I don't know, and I've got a lot to learn, I am going to dramatically size down. And I basically went to just trading very small. I don't think over, I say on average, maybe $5,000 positions. And, sometimes I might get up to close to 10, but I just kept it in check. I never ballooned up because I didn't want to do more damage than I could recover from. But that was tremendous for me because, and it's not to say I didn't have, spurts of profitability in those 7 years. It's just that I'd hit periods of profitability and I do well for some amount of time, but it was just inevitable that it just dried up and the drawdowns would return, and I just would continue to just lose back on the drawdown. I'm back to losing money and got to wait for something to change, or got to change what I'm doing. I try and change what I was doing, and I tried all kinds of things, and some of that just led me off into worse directions, I think. But a lot of it was just, I think, having poor habits for a large number of years. And also because I own my own business, I wasn't starving. So I didn't really have like dire motivation. So I was making a good living working for myself. So I had income. So even though I might have been in the red for 7 years, hey, I'll add a little bit more money each year, every 6 months to refund and make my accounts healthy again. And, hope for the best. I mean, that's basically what it was.
Okay. So you said you had like some spurts of profitability. Do you recall maybe what was your greatest winning streak? Like, were you profitable for, say, 3 months in a row or anything like that? Or
yeah, maybe nothing that good. Maybe more like I was, I'd hit maybe 3 weeks where I do really well, and then it was always 3 steps forward and 5 steps back. Anytime I hit some X steps forward, I was taking more than X steps backwards. It was just a matter of time in those 7 years. It was just really hard.
Okay. And how frequently were you trading during this period, just sort of on average? Were you trading, 5 day trades each day, or was it something, a couple trades a week?
So a couple, years into it. I don't really know, but at some point, maybe if I was to guess, I'd say maybe 3 years into it, maybe a little less, 2.5 years. I don't know, somewhere around there. I kept funding my accounts, and I probably had one account at that time, and I got over 25,000. So I was getting a taste of day traders margin and the ability to fly in and out as frequently as I wanted to, with as much as I wanted to, and not being shackled by the pattern day trader rule. So that was really good. But in hindsight, even though I had over 25,000 in the account, I almost wish like I didn't, because I probably would have saved a lot of time and money had I been under the pattern day trader rule. Probably would have been more of a service to me than a disservice. I think a lot of people see it as a disservice, and it is. But I mean, the reason it exists is to, quote, protect people, at least the people that were as degenerate gambling habits like I did. I think that's why the pattern day trader rule to protect us from losing all our money so quickly, at least.
So how were you affected by the pattern day trader rule when your account was under 25 grand in the beginning?
Yeah, so when I break under 25,000, it was like, okay, now I'm shackled, right? I'm shackled by the pattern day trader rule. So then I would just do my best to either trade my way back above it. Even if I did, I was always nervous because I was so damn close to it. Or I'd go, all right, I'll just throw in another $5,000 and boost me up above it, so I don't have to keep being so paranoid about it that I'm going to break it and get below it again and lose all my freedoms of flying in and out of stuff as I please. Yeah.
Okay, so it was kind of like that $25,000 point was like a psychological level
Completely.
For you in some ways.
Oh man, I think I still have nightmares about it, even though it's not really a problem for me anymore. It's just an old nightmare that won't leave me alone.
Hey, let's take a minute. I'd like to give a mention to DarwinX for sponsoring this episode. So you've heard me talking about DarwinX over the past few weeks, and I do hope you've had a minute to check out the great opportunities they are making available to traders. If not, here's a few quick reasons why you should do so by visiting darwinx.com/traders as you're listening. First of all, DarwinX provide direct access to futures and forex markets. Second, the DarwinX online platform gives you tools to really diagnose your trading performance and develop a track record too, so that you're credible for investment. Now here's the juicy part. Each month, DarwinX invest 1.5 million euros with their top performing traders and sharing 20% of the profits. Plus, in addition to funds from DarwinX, individuals can also invest in you, just like you could invest in other DarwinX traders as well, if you like what you see and are comfortable with the risk, of course. But to learn more about the full benefits of trading with DarwinX, get on over to darwinx.com/traders and join as a trader. Just to repeat that link, that's darwinx.com/traders to learn more. Now, this episode is also sponsored by Salesforce, the world's smartest CRM solution for the age of the customer. Salesforce enables marketers and businesses to blaze a trail with their marketing efforts and deliver the unique brand experiences customers want at every touch point. Those touch points being email, mobile apps, social media, websites, IT, communications, sales, and so much more. Engage and manage your customer's journey on all of them on any device and channel in real time. Do all this and more while collecting data from each interaction to build a complete view of every customer and manage your marketing strategy. Learn more about the customer success platform that creates smarter one-to-one customer journeys at salesforce.com/traders. That link, one more time, is salesforce.com/traders. Thanks so much for listening, guys. I truly appreciate it. Let's return to the interview with Nico. So what did your partner and your friends think about your trading efforts during this time? Like, I presume it probably came up in conversation as you're talking about your friends. Your friends might ask you, how's your trading going? You've been at it for a while now, and you can't really say like, oh, I'm making much progress. What did they kind of make of it? What did your partner think of it? Yeah, I'm keen to hear.
So I wasn't too. I was doing really well with my business on the side, well enough that I could fund my accounts. And because I kept my size in check when I was trading, it was just a slow bleed over time. And even though I was bleeding out for 7 years, it's not like I was taking 20% hits of an account on a single trade or anything. So I was always around. I was always just trying to figure it out. I had deep aspirations. I had passion for the markets. I knew one day, I hoped one day, I'd figure it out, and I would rise and stand up, and banish all these losses I've had, and figure out what I was missing, and find that holy grail, that I've been looking for, and just always consider myself an intelligent person, and I love solving problems and puzzles and whatnot, and I've just always been mesmerized by the stock market and just drawn to it since I was ever exposed to it. And I just always thought I could figure it out. So when friends, girlfriends and whatnot at the time, and friends of mine would ask me, "Hey, how's it going?" Man, I just tell them, this shit's tough. It's like the problem was I told them all my first year how great I was, and I was so proud of myself for my success for my first year. When they kept asking me later on, "Hey, how are things now?" And I was going, "Well, I'm getting a reality check. I'm basically getting my ass handed to me, and good thing I'm keeping my size small, because if I wasn't, I think I would have blown up by now, because that was definitely the course I was on." And seriously, the only thing that kept me going as long as I did was minimizing my size, just knowing I didn't know. When people ask me, I always feel good. Being happy is a habit. I try not to let the money affect me, but it's hard losing money for 7 years on something you're so passionate about. So when someone tells you that's close to you, "Hey, how's it going? How are things?" I'd love to tell them, "Hey, things are great," but instead I just smile on my face that this is hard, and I'm determined to figure it out. But as the years went on, yeah, I definitely started doubting myself. Maybe this isn't for me or whatever. But I pulled through. I was just honest with people when they asked. I don't think anyone was worried I was going to lose all my money. Not that I had a ton of money, but I think everyone believed in me around me, and that helped me keep doing what I was doing too, even if I was losing money.
So speak to us about that doubt, you know what I mean? Because I think there's a lot of us who do experience some doubt, especially when we've been sort of chipping away at this for a few years, and it feels like sometimes we're just spinning our wheels, we're not making a great deal of progress. How did you overcome or push through those doubts? Like, what kind of kept you going?
I think I had hope from the periods of profitability I would encounter. I just, something inside me said there's got to be more to that than luck, and I just got to figure it out. Like, there's got to be more than just luck to that. And if it was just luck, then fine. Why am I even doing this? Because I'm proving that if it was luck alone, I'm losing money more than I'm making money. So, but I think that's what, even though I'd encounter those doubts, that's what held me together. It was my, determination, perseverance, if you will. But I was just convinced it had to be more than luck. Poker is a game of skill and luck. It's got both factors, and I definitely today think that now more than ever about the stock market. But back then, I was just hoping it was more than luck. And the glimpse of that was those periods of profitability I would hit. And when I'd hit them, I'd love them, and it'd feel great. It was just unfortunate that my poor habits would basically, I attribute to the inevitable drawdowns returning.
Yeah. So what do you think were the aspects of trading that you found most challenging to come to grips with?
Just, man, it seemed like no matter what, like, it was really hard for me to understand. I'd learn patterns. I love patterns and whatnot, but I'd learn a pattern and I'd see it work. Obviously nothing's going to work 100% of the time, but to see a pattern that looked like it would succeed, and it was looks like a similar setup the past 10 times I'd seen it succeed, and then to have it fail, that was really hard for me to accept because I wanted it to succeed, because I wanted me to succeed. And I think I was just pressing a lot of beliefs onto, a lot of hopes into what I was doing, instead of being more of an observer and more objective and taking a step back. I was much more forceful trying to make things work. And there's a lot of aspects about trading that are challenging, no doubt.
Yeah, so if I was to kind of summarize what you said there, it sounds as though you were trying to trade what you wanted to happen instead of trading what was actually happening. Like you were trying to sort of push your beliefs onto the markets, and override what was actually going on. So let's cut to more recent times now. I think we're going back about 14 months or so now. And obviously, for anyone who's listening to this sometime in the future, we're recording this September 2015. So what was your turning point? What changed that you were able to go from a losing trader to a winning trader? What was significant about what was a significant change in how you approach things?
Okay, great question. First, I may have misheard you, but I think you said 2015. We're recording this. I just want to be clear. 2016. I might be wrong. I may have misheard you, but
you didn't mishear me. That's quite embarrassing. Yeah, that's.
No.
Maybe I wish it was 2015 still.
Embarrassing is losing money for 7 years straight and not doing anything different.
Sure.
To answer your question, what finally made me flip the switch after about 8 years, I reached the end of I couldn't take it anymore. And I just had a serious sit down talk with myself. Might as well have been looking in a mirror. And I was just, hey man, I've been doing this for 8 years. I am sick and tired of adding money. I'm sick and tired of taking money I worked for on the side, income I make, and depositing it, adding it to my trading accounts, and just slowly losing it over time. It's not sustainable. I need something. I need to prove to myself that, hey, yeah, it's great to be passionate about the stock market, but man, I need to see some serious results and prove to myself this isn't just some pipe dream that isn't ever going to happen, and that I am able to do this. And man, Aaron, I wish I would have done that years and years before I did, because that was the catalyst for all my major changes to lead me to become a consistently profitable trader. There's so many things. I'd say all of these are factors, but it's hard to say any one of them was. They're all to different degrees important, obviously, but it's hard for me to pinpoint the most important ones. But 2 years ago, I went full time, so I had a perfect environment for trading stocks. I had no competition from work, from anything. So I was in charge of my own schedule, so I could be there when the stock market's open. I'm trading stocks. I had my full attention. I didn't have any competing forces. That was major. So all those other 8 years, I was trading part-time, trading at work, trading when I shouldn't have been trading, and it hardly ever worked out well, unless I got lucky. But so going full-time 2 years ago was a big deal. Not only that, this is surprising though, but I've always been actually a really private person, and I've never really been on social media. I've never had a Facebook account. I still don't. I've never had a MySpace account. I've never had LinkedIn or Instagram or Snapchat, or I don't know, all the crazy kids and what they use today. I don't do any of that stuff. And so all those 8 years I was trading alone. And I was by myself, and I had basically no one to compare myself to. And that created an environment for me to just float around and go nowhere, or even a little south, because I lost money for so long. Once I discovered Twitter, oh my gosh, that just changed everything for me, because I got plugged in, man. I went from being passionate about the stock market and knowing no one and seeing what other traders were doing, to being passionate about the stock market and getting plugged in to the to Twitter, where all the traders are, and I could see what everyone was doing. And that just made the world of a difference, because surrounding yourself with people that are better than you is huge. And since for those 8 years I've surrounded myself with no one, that's a factor of why I went nowhere. So once I discovered IU and Nate, and I learned about shorting. I mean, for those 8 years I traded, I was long only. I knew about shorting it later on, but I didn't even know you could short cheap stocks, low price per share stocks. I just kept going long, bad habits, I guess. Once I discovered IU and, hey, there's multi-millionaire traders in this chat room. Wow, let's see what that's about. So I got plugged in there, and I just started watching what other people were doing. Between IU and Twitter, man, that just really gave me the social connection to other traders where I could thrive, because I'm a competitive person myself, in a good way, and I think competition brings out the best in some people and the worst in others. But for me, I think it brings out the best in me, and I don't know why I went 8 years trying without any competition. But once I was able to surround great people around me, then I was able to start asking myself, hey, these guys are humans just like you. What are they? Why can't you do what they're doing? Not that I'm a multimillionaire trader, but they're consistently profitable. Why can't why am I not consistently profitable? Like, it's not like it's not like I have worse luck than them. I mean, we're all getting the same luck in the market. Like, it's the skills. Like, what are they doing that I'm not doing, or what are they not doing that I am doing? And that was a big factor also.
Okay, so I mean, there were a few things which had a big impact on your own trading. So, they were your working environment. You went full time into this, so you weren't competing with your day-to-day job. You kind of reached a snapping point, and you had a big mind shift, and getting plugged in with other traders, like meeting others who were doing what you wanted to be doing and were better at it. So, no, that's really cool. Now, I do want to ask you, how did you prepare to go full-time trading? Did you have a significant amount of savings? Did you cut down on how much work you were actually doing, or did you just straight up close the doors one day? How did you actually prepare to go full-time trading?
So I actually still own my business. I just am not trying to grow it like I used to try and grow it. It is big enough that I am comfortable, and I can choose my own schedule, and I decided I no longer want to work on site. I want to work from home, and so I just do my own thing at home on my own hours, and that gives me the ability to trade as I please. And that was a big deal. So yeah, I do have savings. I do. It's that definitely helped also making the switch. But just being in charge of my own thing. I mean, that's really it's tough to beat that kind of freedom, and I feel very fortunate to have it. I really do.
Let's move on a little bit. Let's talk about how you're actually trading today. Let's dig into your actual methodology. So, how are you trading today? What is your approach, if you had to define it for us?
So I love shorting. I'd say I'm 90% a short seller, I think. I'd guess about 10% of my trades are longs, maybe less. And my ideal short is what they call flying pigs, junk microcap companies that are starving for cash, laden with debt, have, they're just terrible companies, and they're hurting, and they're forced to do dirty things to raise money. And when they do those dirty things, like put out fluffy PRs, and you get these stocks gapping up, 30, 50, 80, 100% or something silly, whatever it is, I'm highly interested. Those are great things. Good opportunities there.
So how do you find these junk stocks, as you call them?
I find them every morning by just looking at what's moving in the market and pre-market. What's gapping up? What volume breakouts do we have? What stocks are up today on more volume in pre-market than they've had for the average volume the past 20 days, month? Is their volume in pre-market up 400% from there? Well, I want to know about it. But it could be even much more simple than that. It could just be a high a day gainers list in pre-market. What's flying high? What's flying high this morning?
Okay, so you said a little bit just before your ideal short setup, or your ideal short stock that you would short would have some sort of fluffy PR around it, or they've done something sketchy to try and raise the price of their stock. Looking at your pre-market gainers list and that sort of thing, that's obviously looking at the price. Do you also need some sort of story to support this?
Sure. So as I encounter what a lot of us call pigs, I have a pig list, which is just a watch list I've titled pigs. And I recommend anyone that's interested in shorting pigs do this if they're not already doing it. But it's a very simple idea. Probably a lot of people are already doing it. I don't think I invented it. When I encounter a pig, I add it to the list. And over time, my pig list grows. Right now, I think I have maybe a little more than 200 pigs in my list. And this makes when they run in the future, former runners. So as they tend to pop up, a lot of traders know how they traded in the past. I always have my pig list up, sorted by net percent change on the day. And as something starts flying, if it's on my pig list, I already know I'm interested in shorting it. I don't have any homework to do. I don't need to go looking at the SEC filings to see what's going on. Although, I might look up at the headline to see, okay, well, why is it moving? I definitely want to know why it's moving today. Is it up? Is it up on nothing? Is it just up because traders are just buying it up? It's just chasing it up because it's low float, or is there some kind of fluffy PR? Is there some kind of, or is there an SEC filing? What's the reason it's up, and try and understand why it's up. But as long as it's on the pig list, I know I'm interested in shorting it. Once they start moving again, it's just a question of when and at what price.
Okay, well, that's the next question I want to ask you is, when do you actually go short? So obviously you're identifying these stocks pre-market, which are significantly above the close of the prior day. At what point are you looking for a short opportunity to actually enter?
Yeah, so, ideally, I'd probably be waiting for the backside, for it to go as high as it's going, and then for it to, if it's going to fade off, or if it's going to snap VWAP or crack or whatever it's doing, high a day rejection, stuff off the high, whatever it is, and then just get in there, because that's typically much safer water to jump into for the short seller. But it's not to say I don't like a thrill, although that might be ideal. I tend to start shorting on the front side, which is definitely a lot harder than shorting the backside of the move. You're basically stepping in front of a train, and you don't just wish for the best, but you try and identify where you think it might top, or at least that's what I'm doing. And I'm just trying to read the chart, the volume, see how it's responding to VWAP, and make an educated guess.
Okay, so like you said, it could, some people might interpret this as standing in front of a train.
Oh, definitely. Momentum is dangerous if you're a short seller.
So how do you manage your risk in that case? Because I imagine, if you time this wrong, you could be very wrong very quickly. How do you go
Right.
about managing your risk?
So part of it kind of goes back to that similar answer from how did I lose money for 7 years straight and just was still alive to keep being in the stock market. And for me, it's controlling my size. I'm not a gunslinging cowboy. I don't size up. I'm not throwing size around like a lot of other traders do. And I'm not saying that's bad that they do that. It's just, for me, I still have a lot to learn about trading, and I'm always going to be learning about trading, but I still have a lot to learn in the sense that although I've learned incredible amounts more than I used to, enough that I feel comfortable, I can step in front of on the short side or on front side and get short. I'm keeping my size controlled so that if something rips against me and goes, just ridiculous, parabolic or something, I'm not sitting in there with my entire account sweating bullets now, because I'm definitely not trying to put myself in very, very bad situations like I used to do, and I'm much more aware of that. So yeah, controlling size is definitely my answer. So scaling helps. If you're a one bullet shooter, it's kind of hard for the guys that are under the pattern day trader rule, because they can't scale because they got one shot, or two shots or whatever, however many bullets they got, and that's about it for their, for a few days until they get their bullets back to take some trades. But scaling and controlling size is how I stay safe.
Okay, and on any given trade or short opportunity that you've identified, how many times are you willing to be wrong before you let it go and just move on? Like if you get in and, let's say you have a stop higher up that gets hit, taken out, you're out of the market, do you attempt to go short again X number of times before you just leave that alone?
Yeah, I used to not do that. I'd try it once, maybe twice, and then if I hit, if it got to my risk level, I just took my loss. And then it seemed like inevitably it would finally do what I wanted it to, and I was just watching it, not participating, and I'd go, man, should have taken it again. But some stocks are very, very, very difficult. I'm sure a lot of traders have the same thoughts. You have an idea on it and you take it and it didn't work, you take your loss. And then you could try that. In some of these stocks, I swear they're doing it just to mess with you. And you might try it, 4, 8, 12, 15, 15 times, and you're just exhausted taking small losses on it. But, then you get easier ones that they just crack, and you just get in there and you just hold on for the fade and you get paid. There's all kinds of different animals in these charts, and there's so many different types of plays too. It's just a lot of patterns and a lot of opportunities to make use of.
Okay, so just slightly changing the subject, looking at your Twitter feed, it's clear to see you're massive on documenting your trades. I don't know if you've always been this way, but what exactly do you do? Like, what do you go through and how do you document your trades?
Sure. So when I finally reached the end of my rope and was like, I need to see some results in my trading because I've just been losing money for so long. Part of that was I realized that, you can't improve what you don't measure. And I think some people will argue, well, your account balance is what is the metric. That's how you measure. But for me, I needed something more than that. And I started tracking my P&L, and to not be that degenerate gambler who's just pulling the handle on the slot machine time after time after time again, even though it stops work, even though it's not working. I wanted to start tracking my journey and see what I could learn from it. And it seemed to me from some of the books I read that, tracking your equity or your P&L curve is a good metric of how you're performing. So I thought, wow, that's interesting. I haven't done that for 8 years. Maybe I should start now. I'm trying to make big changes to make this trading thing work. I should start doing that. So I got a Twitter account and I said, all right, man, everything, whatever I trade today, I'm going to put it on Twitter for the world to see. And it's not really so much for those people, for everyone to see. It was for me. It was for my own benefit to help me stop being a degenerate gambler in that sense, and to be more responsible and to hold myself accountable for my trading decisions each and every day. And that helped me get a handle on my over trading. That helped me get a handle on my being impatient. That helped me get a handle on becoming consistent. It helped. There's a lot of people that don't believe in posting P&L. I'm pretty certain I'm outvoted. A lot of people don't think it's a good thing for the trader to do that. Me personally, I so firmly believe, for me, that it was a factor, and I even think to say a large factor, in helping me go from being a losing trader to a consistently profitable trader. Because the amount of accountability and feeling of responsibility that it provided me, thinking that all these other traders were looking over my shoulder. Not that they were, not that I had all these followers or anything. I mean, I didn't have any followers when I first started doing it. But again, I was doing it for me, not for other people. It changed something in my head, and I started making much better decisions when that was definitely a factor to me making much, much better trading decisions. Kept me from being reckless, because I was very easy to be reckless for a lot of years. I could go from zero to reckless extremely quickly, and I don't do that anymore at all. I try not to.
Yeah, I like what you're saying there, because when you do post, your P&L, and when you are, not so much that, when you do have that accountability, I mean, it's very easy to lie to yourself. As much as you don't want to do it, it's very easy to do. But when you've actually got, like as you described it, there's someone looking over your shoulder, that accountability and actually having to lie to someone else is very difficult, or for most people anyway. But I just want to throw in there actually, measuring your P&L I think is probably quite effective when you're at least a profitable trader. When you're not a profitable trader, up until that point, it can be quite difficult to measure your success in terms of P&L. And Futures Trader 71, who was on episode 82, has a really good bit about how other ways to measure your success, or your progress, I should say, besides your P&L. So if anyone wants to hear more about that, chatwithtraders.com/82.
I think I want to hear more. I think I'll be listening to that one, because that sounds great.
Yeah, he's awesome. Definitely check out that episode with FT71. He's the man.
That's cool. Yeah, for me, when I could see that I was building a spreadsheet and putting my daily P&L in it, and it would change what my P&L curve was doing, I felt like I had something tangible. Like I felt for the first time ever, I was in the driver's seat, and I was going, okay, I can make good decisions so that I can end the day in the green, and my curve will go up. And I felt like I was drawing something slowly over time each day, and kind of felt like an artist. Like I was like, wow, this is really cool. I want a really nice line. And it helped me making my decisions when I was trading and going, before I took a trade, I go, you know what, is this really a good trade to take? Is this just a substandard trade I should be skipping? Is this really a trade that I want to affect my P&L curve? Because if it's not, I don't need to be trading it. I'll just wait for a better setup. And that was a big deal for me.
I really like how you framed that, as in, is this a trade I want to be affecting my P&L or my equity curve. I think that's a really good way of looking at it. That's cool. So just to wrap this up here, what suggestions do you have for traders who are just starting out today? If there was just maybe one or two things you could share with them, you've already shared a ton of great insight, but just to wind things down, one or two things to take away, what would you suggest to them?
We just got done saying it, but you can't improve what you don't measure. And for me, that was creating a P&L curve and tracking my daily P&L, along with some other stats that I've included also. But the other trader you mentioned had some good ideas you said about for beginner traders or struggling traders for tracking and measuring, some kind of metrics that they're using. Whatever it is, take a scientific approach and measure what you're doing. Please, if you're not, I really think it can help you gain insight into what you're doing and why you're doing it. That was a big deal for me. Another thing is habits. I'm a firm believer in, good trading is synonymous with good habits. And when you have bad habits, I had bad habits for 8 years, and it was very hard for me to unlearn those habits and create better, good habits. And if you're just starting out, it's great because you can start out from not having bad habits and you can develop good habits from the get-go. But if you've been struggling a while, identify what you're struggling on. Are you over trading? Are you impatient? Are you just gambling? We all have the same problems. It's just identify what you're doing wrong, and what they often, it's very common to say a chain is as strong as its weakest link. Find your weakest link and focus on it. Pick on yourself. What can you do to become a stronger person and a stronger trader? And lastly, I traded in by myself for 8 years. I'm a competitive person. If you are too, surround yourself with great traders. Surround yourself with traders that are similar to you or a little better and like-minded. I have trading buddies I trade with. TWB 52, shout out to him. 4Trade, shout out to him. Those guys, we're like-minded people, and we trade the same things. And if you're out there hunting, if you're just one wolf hunting for food, you're not going to eat like you are if you're out there hunting with more wolves or another wolf, or you have a team of wolves or a pack of wolves that are like-minded and are looking to feed on the same thing. So, connect with other people. Find people that are like you, and see what you guys can do. It's the Boy Scout system. I used to be a Boy Scout. I don't remember what it is, but have their back, and they'll have your back, and try and keep each other out of trouble, and just do your best and always learn, man.
Good stuff. Good stuff. Nico, where is the best place listeners can go to find out more about you?
Right now, it would probably just be I guess my Twitter. So at inefficient MRKT, and that's my Twitter handle. I think I'm going to start a blog though, because over the past 14 months, I've had a tremendous amount of people ask me for my spreadsheet that I created where I track my stats and my daily P&L and my P&L curve. And I think I'm actually going to be releasing it very, very shortly into the wild for everyone to use, because I know a lot of people use TraderView. I think it might be called. I think it's free. Anyways, I don't know much about it, but if there's a lot to be said for just whatever it is. If you're using TraderView, great. If you don't want to pay for a service like that, I got a spreadsheet you can use. If you like what I'm doing, you could modify the spreadsheet however you please. And I'd love to I've gotten an extreme amount of support from a lot of people for what I've been doing for the past 14 months. And I just want to say thank you guys. And hey, if you're not consistently profitable, I'd love to help you as much as I can. Send me a message.
Very good. So at inefficient MKT on Twitter, that's it, right?
I think it's MRKT.
MRKT. Okay. Mark it without the vowels.
There you go.
Cool. All right, man. Well, I'll put a link to that in the show notes, and probably if anyone wants to get that spreadsheet that you're going to be releasing very soon, probably the best thing to do is follow you on Twitter, because I'm sure you'll put the word out then when it's available, yeah?
Perfect. Absolutely.
Cool. Well, Nico, I just want to say thanks a lot for coming on the podcast, man. I appreciate it.
Aaron, thanks for having me. I'm honored. Appreciate it.
You've reached the end of this episode of Chat with Traders, but rest assured there are more episodes loaded with real market insight and zero hype on the way soon. So to stay updated with each great new release, subscribe to the podcast in iTunes, and we'd love it if you'd leave a rating and review. We'll catch you next time on Chat with Traders.